Hello everyone, welcome to Hawkeye Traders. My name is Randy Lindsay, host of today's live demonstration room. I'm here to educate and to inform you on the proper use of Hawkeye chart tools on the live edge of the market. I want to make sure that we have everything starting off fine, so as long as you understand that we are here for educational purposes only, then we're starting off on the right foot. Hawkeye is not an investment advisory service. We're not registered investment advisors or broker-dealers. We don't try to suggest or give you information on whether to buy or sell any securities or currencies. You should not buy them or sell them unless you decided for yourself to do that, or if you have competent advice from a registered trading advisor, which we are not. There is a great amount of risk in trading futures, stock, and spot currency. There's also a great amount of reward. You have to understand what those risks are, and please never trade these markets unless you understand the risks involved. You can lose a lot of money equally well as you can make a lot of money. So please do not trade money you can't afford to lose. Never ever trade in a live funded trading account until you have first proven you can consistently and profitably trade in a simulated trading account. Okay, so with that in mind, we're going to go through and show you exactly what we're looking at as far as the markets. We're going to be going through and dissecting the Hawkeye tools one at a time to make sure that you understand what Hawkeye is about, the Hawkeye method, and to help you to apply that to your own trading. If you are not already a member of Hawkeye, then I can help you get started today. Hawkeye is an awesome mindset, is an awesome tool set. It is an awesome strategy to follow. But you have to invest some of your own time, and you have to invest some energy into the methodology if you really want to get anything out of it. And so I'm here every week to try to help you along that path. This is a demonstration room, so I am going to be going through and demonstrating things, but the real meat of Hawkeye is in our resources area and in the members site. So when you become a Hawkeye member by purchasing any of our indicators or tools, then you get access to the members area with all of the previously pre-recorded content, the videos and instruction that are contained there, including the teaching materials and PDFs that are available. And you get access to members-only teaching and training and access to the members-only Skype chat room. So I really encourage you to sign up. You do that just by going to Hawkeye Traders website, hawkeyetraders.com. If you're not a member already, download the Volume Secret. It's a free book to help you get started on that. Find out more about our indicators. You are here today because you signed up for the free training room. But under the education, you can always see previous recordings, and I'm going to be posting these recordings right here. So if you go under education, training room videos, then you'll be able to see an archive of last week's video in addition to any of the previous videos that have been recorded to date. Okay, so I'll be keeping track of that. So anything that you can see posted here, you'll be able to get a replay of those. So you don't have to email us anymore to get a link. Just go to the website. Also, if you're in the members area, right here, if you log into the Premier Members area, you'll also see a link under the other archives section of the resources to previously recorded videos. Okay. Before we get started, are there any generic questions or anything that I can help people get started with before we get into today's lesson? Last week we ended up looking at some of the faster time frames, and we also delved into the forex market. I've gotten quite a few requests of people who want to look at Hawkeye from a longer term time frame, from a longer term perspective. They want to look at some setups. Mike Smith, our options specialist, has done that for quite some time. He's been following Hawkeye from the longer term daily, weekly, monthly setups. And he has an alert service that he shows how Hawkeye is trading using those specific setups. But I wanted to show you some very quick uh, setups that you can use if you're looking at the longer term setup time frame. Someone just before we ended last week asked about bonds, so I still have that set up here to show you where we were looking at the bonds trading. Consolidation for a considerable amount of time, several months of consolidation, and then you can see a consistent volume build and breakout at this point. Gap up with strength, so Hawkeye was showing that the trend was in play to show that, but when you see a no demand volume bar with a pivot, it didn't quite make a demand zone, but a supply zone here, which is we refer to as resistance. But when you see no demand, a weak, almost doji looking bar with a pivot, then you're expecting to see 3 to 5 price bars of reversal from that. And that's just simple price action follow through. So you see an expansion, you'll almost always see a follow through in contraction. So it's like breathing. You'll see an expansion, you see a contraction. So the market just kind of moves that way. And so that's what we see when we see this painted on a chart. We expect to see the follow through. And that's what we talked about last week. And that's exactly what we saw. We saw a nice follow through, a retracement right back to the breakout. This retest of the breakout will tell you whether the trend will continue short, which is the weekly and the monthly overall trend, or is this initial breakout going to be the direction? This is just the retest of prior support before it continues on a stronger trend up. So far, volume is telling us it is not going to be the case. Volume is showing there's not enough volume long term to push the bonds into a long trend. So we can see short term, Hawkeye is already showing a short trend on the daily, a short trend on the weekly, which is in a neutral or congested phase, and a continuation of a short trend on a monthly. All right. Since we are coming back into an established support region, going short, if you're going short in this, then you need to keep your stops limited because your risk in this is going to be greater knowing that prior support and buyers came in at this level. So with a caveat. The place to have taken a risk on this trade would have been back up here where you knew that you're going to be expecting some pullback. All right, so therein, that is the basic analysis you can use knowing Hawkeye and knowing what volume and price are relative to each other. We see momentum, volume, and price action working together with our tools to help us to see whether to make a trade or not. So it gives you a definitive price decision. Okay, so thank you very much, Wayne, AP, appreciate that. What time is best for swing trading? A lot of swing traders will like to take the intraday time frames, like a 15-minute, 30-minute, and a 60-minute are usually some pretty good swings, because if you pull up a 15-minute chart, let me see if I've got any of those set up here. I don't. Well, let me see if I've got some set up over here. Okay. 3612. Let me see here. That's a 360 daily. Here we go. See, here's 15-minute with the 30-minute. You can see that a full day of 15-minute will give you a a good trend, but that trend usually will not last more than a couple of days. So swing traders usually like to trade several days, maybe even a week to 2 weeks of time frame. So an hourly chart probably would be a good solution, because an hourly chart can go several days or even possibly up to a week. If you're trading an hourly chart, then you can do a 2-hour chart and a 4-hour chart as your comparison. If you don't have access to a 2-hour chart, then a 4-hour chart and a daily chart would be a great comparison if you're trading off of 60 minutes. So that would be a good recommendation for that. Absolutely. If you purchased the starter package, oh, you had purchased it a couple of months ago, you haven't been using it, that's okay. When you tried to use it recently, it wouldn't work. Well, that's a support issue. So if you send an email to support, Mr. Marcus at HawkeyeTraders.com, support@HawkeyeTraders.com, then we'll be glad to help you get everything worked out and set up. Absolutely. All right, so Jerry, your swing trading hourly is a great time frame. If you get that set up, longer term time frame, if you're trading 360, 720, or 1440, these are the time frames Nigel really likes if you're trading longer term. However, if you were to go to the shorter time frames, the swing trader, if you're trading a 60-minute, then I would take a 120 fat man. So if your primary chart is a 60, then set your fat man to a 120-minute or twice the time frame. The rule of thumb for setting up your fat man is for time frames less than 60 minutes, it will be 3 times your fastest time frame. So in this case, if I have a 15 times 3 is a 45. If I'm using a 5-minute, 5 times 3 is a 15. If I'm using a 30-minute, then 3 times that. Okay, so I use a 90-minute. However, if I use a 60-minute or greater, a 60-minute all the way to a daily, then you use 2 times the fat man. All right, so if I have a 60-minute, then I use 2 times 60-minute or a 120 fat man. If I use a 360, then 2 times that will be a 720. Okay, and then the third is if it's daily or above, then just use the exact same fat man. So a daily chart, you'll use a daily fat man. Weekly chart, weekly fat man. That's the rule of thumb to use for setting up your fat man. A lot of people like to use more than one fat man because it helps them to get a good feel. And I encourage you to do that. Set up multiple fat men on your chart to look at and see the differences and the comparisons. Okay, because you can see a 45-minute fat man compared to a 20-minute fat man is going to give you a little different feel, but it's going to give you the same data, just going to be much faster. So same thing with longer term. Here's a daily and a 720 trading off of a 360. So you can see the differences there. Okay, Marcel, if you're not getting replies back from support, then send an email to me at randy@hawkeyetraders.com. We'll make sure you get taken care of. Does the Fat Man drag MT4 charts, or is it user-friendly? Well, I haven't had any problems using Fat Man on MT4. There are a lot of Hawkeye users using the Fat Man on MT4, so I don't see any problem with that. So Jerry, you shouldn't have any problem with that at all. No, sir, Mr. Rudy. None of these studies are available native on the Thinkorswim platform. NinjaTrader is probably the best solution if you are a Thinkorswim trader, because you can use your Thinkorswim account in NinjaTrader and have all the Hawkeye analysis done on the NinjaTrader platform. But right now, that's the best solution that we have if you are a thinkorswim trader. Um, uh, who is volume spread? Yes, the volume indicator that we use in Hawkeye uses volume spread analysis. So we take and we analyze the entire volume spread over every single price bar. And then performing volume spread analysis, we're able to identify and determine the skew or distribution of of volume over each individual price bar. With that analysis, we then compare it to the open, high, low, and close of every price bar to determine the presence of buying or selling activity within that price bar. We do all that in the background, but we make it simple for you, the user, in that we color code the price bars to determine whether that price is actively selling, neutral, which is an even distribution. Nigel refers to this as no demand, or buying volume, which is color coded green. Okay, so buying, selling, no demand, or neutral. Okay, so you can see long before the trend comes in, volume is already telling you that buyers have stepped in and have started accumulating this position, and then boom, you can see where the real breakout occurs. Selling starts to come in, you can see price goes neutral, and then selling comes in, demand, and then there's the real price action. So volume really is leading the way and is showing you ahead of time what's going on. So volume spread analysis is built right into the indicator. You just don't have to have the noise or all of the technical stuff behind it. We've whittled it down into a very smart but easy to follow indicator that helps you to read and understand it on the charts. Yep, it's totally different from the VSA of other competitors. Nigel Hawks back in the day worked with Tom Williams when they were putting together that. Nigel coined the phrase volume spread analysis. He also did most of the work behind that. But when they split ways, um, um, Nigel continued to develop the indicator and the methodology behind that. And in taking volume spread analysis, which only looks at the distribution of volume, it then extrapolates it using price. And then he was able to come up with the volume price analysis. So using volume spread with price action to identify known uh, known regions where aggressive buyers are entering the market or selling is entering the market. So it's a real big difference. And this is a lot easier to understand and to follow. And it's definitive. Exactly. There's a lot of questions with regards to the forex trading room. So yes, we have some special specific trading and training that we're developing specifically for forex traders, but we cannot release it until it's ready. And we want to make sure that it's complete and it's not half-baked. So it's been a long time coming. Thank you so much for your patience. We just need a couple more weeks to iron out some last minute details, and then we will be sending out an email with an official release launch on that. We like to let you guys know ahead of time we're doing stuff and that we're working in the background, but sometimes it comes back to bite us in the rear end because, yeah, that's right. Here we go again. I know. Uh, but that's the way it is. And I'm not going to give you guys something that's just not ready. So we're doing the best that we can. If it were easy, everybody would be doing it. So I appreciate your understanding, and we're gonna press on. This is gonna work out great. You guys are gonna love it once we finally get it out. But thanks again for your patience. Um, let's see here. So the 4 hour, you will use an 8 hour and daily roadkill. 8 hour, yes, that's exactly right. 4 hour, 8 hour daily, Mike. 2 times and 4 times. But 4 times, it needs to be a multiple of the base time frame, but it also needs to be divisible by a daily chart. Otherwise, you're going to get messed up volume data. Yes, Hawkeye does work on Renko charts, but the roadkill will not work on Renko charts. So you need to take that into account as well. But the trend, volume, momentum all will work with Renko charts. All right. Someone had asked me today to go through and look at strategy looking at the 3-minute, 6-minute, and 12-minute time frames on the S&P 500 futures contract. So I wanted to go through that very quickly. To set up your strategy to trade using these charts, I do have a workspace here that's already set up to look at that. Then what you're doing is you're looking at a 3-minute as your primary trading time frame. A 6-minute then is your secondary confirmation time frame, followed by a 12-minute, which is your third time frame. Okay, if you follow the Hawkeye 3-step entry and exit method, which is, if you're a Hawkeye user, it's located in the Resources tab of the Members area. Look for the 3-step entry and exit method. Then this is exactly what we're looking at. You're looking for the fastest time frame to show you an initial entry point, which is a green trend dot, green volume, bright green heat map. That's step 1. That has to be criteria number 1. Number 2 is that your secondary time frame has to have affirming momentum. That means it can be a dark red, dark green, or bright green if you're looking for a long. If you're looking for a short, it has to be a dark green, dark red, or bright red. But it's all spelled out in the document. But in this case, it cannot be bright on the opposite direction. So if you're looking long, you can't have a bright red. It has to show weakness in the direction that you're taking the trade. And the volume has to be in agreement with the direction of the trade. Okay? So if you're looking at the trade and you're looking for the entry point where the trend is green, then you need to see that the volume is green and you need to see momentum is at least dark red, dark green, or bright green. The third criteria then becomes the 12-minute volume. You look at the 12-minute volume at the same time or location that your trade is coming in, and if 12-minute volume only is in agreement with the 6-minute and the 3-minute, there you have 100% confirmation of a trade entry. All 3 time frames are in agreement. Icing on the cake is that if the trend is moving in the direction of the longer term trend, then that's a full-blown go. Now, I like to use the 60-minute with a 3, 6, and 12-minute chart because it gives me a footprint for not only trend direction, but I can apply my zones to the chart, and it helps me to see supply and demand, support and resistance areas that I might be running into if I were to take a trade or a trend entry. I also like the 3, 6, and 12 because they're a little bit off the beaten path. Most traders who trade these time frames will trade 5-minute or greater charts. I like 3-minute because it's a little faster. It might get me in just a little earlier, and it's what most people really aren't looking at. So I like to be a little off the beaten path to help to see that these entry points. I'm still confirming with the longer time frames, but those longer time frames are confirmed with a good entry position. All right. Also, volume is always going to be a key. Whenever you see big moves in price and you can see that the volume coming in at the exhaustion of those trends are opposing. And if you get a pivot on top of it, then that tells you that the direction of that trend has been exhausted. Expect to see consolidation and then corresponding breakout. Volume is always the key, whether you're trading with moving averages, trend lines, MACDs, other systems. You don't have to have the whole Hawkeye package to see. Volume, though, is the most important key, and that's when we give you a starter package to help you get started, because if you understand volume and price, the other things just become gravy. These tools are nice because they show you where the trend has evolved and has become definitive to the point to where you can say, this is exactly where I enter. Volume, it's not so cut and dry because volume can change color every other bar. But we can see specific locations where volume does tend to change over. And when the hand moves from buyers to sellers and then back from sellers to buyers. And so they're always going to be in the market. Some are just going to be more aggressive at different times than others because price becomes attractive at a certain point. At this point right here, price became attractive to buyers. At this point here, price became attractive to sellers. Nobody wanted to buy here, but sellers wanted to sell. Here, now buyers want to buy. Sellers can't overcome that. They don't want to sell at this because they don't think they can take it any lower. So there's always going to be the push and pull in the market. And that's what we as Hawkeye want to see and take advantage of. All right. So there in a nutshell is the strategy. It doesn't have to be a 3, 6, and 12. It can be any time frame that you like, and I was showing you that earlier. If I were looking at longer time frames, here's a 15, 30, and a 60. You can see that on the opening 15-minute chart, here's a green trend dot, volume coming up from previous day into this trend, volume, momentum. Okay, second time frame, volume, momentum. Third time frame, volume. Okay, so 27th, right there, volume, right there. All right, so 3 time frame confirmation, take the long, take the trade, exit before the end of the day or before the trade goes over. If you hold overnight, then you're always going to be taking some risk, but that's the methodology. Exact same method, different time frame. Okay, daily charts, same thing. Trend, volume, momentum. Secondary time frame, volume and momentum. Third time frame, volume. Everything is in agreement. Take the trade. Manage the trade according to risk. Exit the trade either when your stop is hit or when your profit targets are hit. Okay. Yeah, I've showed you stock. I've showed you futures. It's the same thing for forex. Using a 360 chart, 720, 1440. If you're trading with intraday time frames, you can do a 5-minute, 1530. You can do the 15, 30, 60. Or if you're trading with tick charts, you can trade the same thing with tick charts. Here I've got a 328 tick, which the gearbox tells me is the optimal tick speed for the Euro US dollar. So this gives you 328. It doesn't matter. Fastest time frame, you're looking for trend, volume, momentum. Second time frame, you are looking for volume and momentum. Third time frame, you're looking for volume. You apply the principles to whatever market that you're trading, and then you should see some consistent results. If you're not seeing consistent results, then you need to look around for a different time frame because the market changes. The market breathes. Many times a 5-minute time frame will be a nice chart, but sometimes it's a horrible chart. Here you can see a good example here. Here's a day where the 5-minute chart didn't show anything on Adobe, but yet yesterday it was a really great day on Adobe. So 5, 15, yep, you're going to have to look around and see what is consistent. That's why I like the longer time frame, because the longer time frame takes a lot of the intraday noise out and you get a lot more of a pure trend move. So you notice how smooth this monthly chart is? So if you're just trading the trend on the monthly chart, then you've been in since 2013. But yes, these are huge pullbacks relative to the overall chart, but you're still in the trade. So you've taken this trade from a 40 all the way to a 190, 109 at 3 times your initial investment. But yep, it's all relative. You need a big account to trade something like this. So if you got a small account, then you need to trade the much faster time frames. It's all about managing risk. All right, well, that was a lot, wasn't it? So let's go back. Let's go back to the questions. I want to make sure I cover these questions. Getting started with Hawkeye? Yeah, absolutely. If you get started with volume, then volume is really the key. If all you have right now is the Hawkeye starter package, then volume is the place to start. But if you only have volume, then like I said, volume can change quickly. And it's really difficult to see exactly where to enter if you are using just volume. So it's highly recommended that you integrate volume with whatever method or strategy you are currently trading. If you are trading MACDs or moving averages or trend lines, then integrate volume with your strategy and see if you can tell when buyers are coming in, when the magnitude is telling you that this is an exhaustion move, and the follow through of that is no demand followed by selling pressure. Okay, so it's telling you a lot of information on the opening and on the volume behind that. Okay, if you're trading longer term, absolutely, you can see using trend lines or moving averages, you can see congestion zones and breakouts. So volume really helps you to have a third dimension on your trading, and it helps you to be able to identify moves and to stick with them over time. If you're trading options with any of these, absolutely, Hawkeye is phenomenal. I trade with options all the time because it is my backup plan. I'm heavily trading stocks, and whenever I see these types of volume setups, then if I have any short or hedging put positions, then I'm going to get out of those. I'm going to cover my hedge, and I'm going to be either continuing to hold long, or I'm going to be accelerating my long by buying a call in the position. If I do not have an existing position of stock, then I will just use calls, either long calls, short puts, or long puts, and I will only short a call if I have stock to cover it. But I can short puts because a cash covered put is just as good as a long call, in that if the price comes against me, then all I do is purchase the stock against the direction. So it's a great way to trade, especially if you're looking at longer term positions. Hawkeye is a beautiful tool to help you to see that. Looking at volume, looking at wide bar setups, then it's a great way to trade using options. The yellow pivot dots, those identify isolated highs or lows. So they are typical reversals. You expect to see 3 to 5 price bar following a pivot. Also, if you were to group pivots together, then you can see consolidation, accumulation, distribution regions by grouping them together. And those usually occur during periods where the market has gone sideways. You can see cup and handle, higher handle type positions setting up where you're going to be using these. So the pivots are a great tool to help you to see that. Those are also included with your starter package. The pivots paint once an isolated high is identified. So an isolated high by definition is a higher high than the previous and the next bar, a higher low greater than the previous and next bar. So let me blow that up for you and see that one little one on the top there. The high and low of that bar is higher than the previous bar, high low, and the next bar's high low. Okay? So the pivot will not paint until the following bar plots. And that's it. Okay? So that way you can see it. But by definition, it has to wait for this bar right here to close before it knows whether the low is greater than or less than that bar. This pivot low here, this is a pivot low because the low and high are lower than this previous and that next bar. Okay. Reg, I like the idea of scanning for trades using daily, weekly, monthly. I do too. I've got scanners set up that do that for me automatically. This is very nice. Tutorial of indicators. We do have several tutorials available in our users area that go over that, and some YouTube videos on our channel that show how to set that up. Okay, absolutely. NinjaTrader, yep, it's the same way. So let's pop over to Ninja real quick. I've spent a little bit of time in TradeStation, but let's go over to Ninja and show that. Okay, so here's a NinjaTrader using a daily, weekly, and monthly. You can see I do have a market analyzer that is set up to scan through and show me where there are specific stocks that look to be set up or not. And you can see I've got a list of those that I have here just as set up an example. But you can see there are 2 trend dots on Boeing Aerospace. Okay, 2 where you got the trend. The volume has gone from white to green, and the momentum is green. So you've got a solid trend of green that came from weakness on Boeing in the direction that you're looking for. Here's another one. NVIDIA is showing it has 6 current trend dots to the long side where a consistent trend of trend, volume, and momentum are pushing you to the long side. Here is a good transition point where you've seen net applications has gone from a volume, has transitioned back out. So this is a great roadkill, a volume roadkill setup where it's gone through a small consolidation, has come back into a long. So yeah, Hawkeye is ideally set up to use and to scan through a whole bunch of potential setups if you're looking for things to trade with. So Reg, I hope that helped a little bit on that. Yeah, Tim, you had asked when you're using things if you're using volume only. So let me pop the volume workspace up here real quick. If you are using volume only, then yes, you can use moving averages, you can use stochastics, MACDs, trend lines, exponential moving averages. Those are really great ways to do that. So you pull a trend line up, if you were to pull one, let me pull this array. So you can pull that here and pull it to a specific point, and you can see when that breaks, or if you can move it down for drawing. Once it breaks at any point, then you can see that trend has changed, and now you start looking for the reversal. So if you can see confirmation of stochastics coming from an oversold region, or when you have a crossover MACD at that same point, and volume is telling you that it is building, okay, then that gives you a lot more confidence to know that trend's broken, that price is starting to come back up, and you're starting to move in a direction opposing that. Alan wants to know if we have a trial period. No, we do not. That's why we have a demonstration room here, is we're here to show you and to demonstrate for you how Hawkeye looks, how it acts, and how we use it on the charts. But once you purchase, then no, there's no trial. The market analyzer is not part of Hawkeye. Hawkeye is part of Market Analyzer. A Market Analyzer is a part of NinjaTrader platform. If you have the TradeStation platform, then TradeStation has the radar screen and scanner as part of that platform. So it's a little different animal. Here we pulled back up the Boeing Aerospace. Here you can see price ahead of time showing a big wide bar. You can see volume is coming in, saying that this exhaustion and price move has started to show a turn of sentiment. Okay, where you had mostly neutral accumulation prior to that, then something occurred which caused a strong buying sentiment to push that volume. Now price is following that move. So you want to identify those things and then use your other tools to help you to see when the stochastics and the MACD have given you a favorable entry point. Okay. What Hawkeye does is that we like to use those exact same rules, but we use a definitive point that helps you to see that at these locations, when trend, volume, and momentum occur at the same time, then we have signals that identify where those entry points should be located. Yeah, whether you're using longer term, short term, or not. You're very welcome. Frank, could you explain your chart setup on the ES, the 3, 6, and 12, which Hawkeye indicators are shown, why 3, 6, and 12, and so forth? Okay. Okay. All right. See you, Alan. Don't let the door hit you on the way out. Um, okay, here we go. The question is on the ES. Frank. All right, so on the 3-minute, and let me blow this up so you can see it. Okay, I have set up on this chart the Hawkeye trend with the wide bars, pivots, and the volume paint bar. Each of these bars are painted the same color as volume, so that way I can see what's going on. Right here, I have my second time frame chart. This is a roadkill that I have set up for a 6-minute chart, so a 3-minute time frame. I now have my roadkill indicator loaded on the same chart to show me a 6-minute trend and volume. This is a higher time frame heat map. The heat map is our momentum indicator, so you can see I have a 6-minute heat map also loaded on the same chart. 6-minute heat map gives me my second time frame volume and momentum. So if I'm looking specifically at a chart, and pull that right here, setup, green trend dot, volume and heat map, then I can see right here on my second time frame I'm automatically aligned. So that's a good place. Third time frame is right here. So if I were to pull this up, then you can see that it is 3 times my time frame, my 3-minute or a 12-minute chart. So I'm looking specifically at the 12-minute volume. I told the roadkill to not show me my trend dots because I don't really need to see them. All I need is the volume. So when I see trend, volume, momentum on my second time frame agree, then I see trend, volume on my third time frame agree, then I know I've got a good entry point. And the roadkill shows you where other alignments occur as well. Like right here, you can see that a trend has set up so that the longer time frame trend has agreed. So as a nice entry point. The second time frame shows the volume has come out and back in agreement with the longer trend. So those are volume roadkills. So you can see these points show nice re-entry points on an existing trend if you have not entered already. And here's another one right here. Here's an existing re-entry point. Here's a re-entry point, and here's a re-entry point. Okay, so these are all places to analyze and to look at the data to see if those are places to enter or not. And they have to be in agreement with the current volume and momentum. Now this is just a standard volume. I've got it squeezed way down because overnight volume is always going to be bigger, less than the intraday volume. But this is the volume for the 3-minute, and this is the momentum for the 3-minute. So this setup gives me all of the criteria I need to make an entry or an exit on one chart. So using the roadkill helps you do that. The roadkill is part of the professional package, as is the higher time frame momentum. You also get the filter tools that we use. The KISS or the Fat Boy are both tools we refer to as filter tools. They help you to identify overall trade and trend directions in the market, whether the markets are going to be trending or consolidating and choppy. And so these filter tools help you to see that. Now, why I chose 3, 6, and 12, I explained earlier. I was looking specifically at off-favored markets and market timeframes. So timeframes where the market generally is not at. Most people in the markets are trading 5-minute time, so a 3-minute gives me a little bit of a leg, an advantage in trading the market. That's the only reason. If you're not trading the faster time frames, that's okay. The information I'm giving you is applicable to all the time frames. So if I were to pull up my longest time frame, then you can see I can place the exact same information on there. Here is my second time frame roadkill. Here's my higher time frame heat map. And I can also load a third roadkill on there to show me my third time frame setup. Everything can be done on a single chart. I like to have the other charts up just to be able to see the 6 ways the market moves. Because if you understand where you are in the market at any specific time, consolidation, trend, run, breakout, congestion entrance, and so forth, then you know what's going to be expected at any specific time. So you look at a chart, you know exactly where you are, you're ready to trade that chart without taking a hesitation or a step back. So Frank, I hope that was in detail enough for you to understand my rationale behind that. Doesn't matter which chart you're using, which time frame you're using, but that's my time frame, and that's how I use the charts and setup. So once you're familiar with the setup, absolutely, you don't need any of the other charts. You can just trade off of a single chart and then take the trades as they give them to you in the direction that they give them to you. You're very welcome. Please go over the Hawkeye time zones, colors, what they mean. You're probably referring to the Hawkeye zones. They're not time zones, but they're just price action zones. But these specifically are tools that help you to see supply and demand or support and resistance areas in the market. The colors are meaningful. So if we were to look at the indicators itself, then it will show you exactly what the colors refer to. The aqua color are brand new zones, zones that are just formed, that price has only just created. Okay. When price goes back to that zone and hits it one time, so we call that a bounce count, then bounce color changes it from aqua to blue. So if you see any blue color, that tells you automatically price has only hit that zone one time since it was formed. If you see an orange color, then that tells you price has hit that area twice since it was formed. If you see a purple color, price has hit that region 3 times. Okay, so it gives you a measure of relative strength of these zones as well. So not only do you get color identification, which actually looks really nice, but it helps you to very quickly assess the price action probability of that zone. Okay, is the zone strong? Is the zone weak? Is there a probability that the price will break through that zone, or is the probability more in favor of it reversing and bouncing off of that zone? So that's the fundamental data behind that, okay? Okay, so 1, 2, 3, orange. 1, 2, 3, purple. It's actually 4. Probably counted that one as the second one there. Oh, no, that's the 4 one. This is the 3, that's the 4. And then there's the brown, that's 4 or more. That's been there for quite some time. Can you show the same thing by looking at all 3 charts if you don't have the roadkill? Absolutely, Johan. That's why I have the 3 charts here. So you're looking for the roadkill here is showing you volume and momentum of the second time frame. So all that does is see this is the volume and momentum on your second time frame. All it does is it takes that and replicates it on the 3-minute chart. So yes, if you don't have this, then you simply look at this and this. And then the third time frame right here is the volume from the 12-minute chart. So if you go over here and look at this 12-minute chart, then that's what you'd get from it. So the roadkill is a tool which shows you the alignment when they occur, and it gives you the convenience of having all on a single chart, but it is not fully required to follow the Hawkeye methodology. So the Hawkeye standard package is the tool set that you'd need if you're looking at following our methodology. It's the minimum tools that we sell that enable you to follow our methods and on entry, exit, and money management criteria. The other tools in the professional package are convenience tools that help you to trade easier and to help you to make much quicker trade decisions from a professional perspective. So you're looking more at overall trade parameters. You're looking at the tools like the Fat Man, the Fat Boy, the Gearbox, and Gear Changer. So these are convenience tools that help you to do the same thing you're normally doing, just do it quicker, easier, without as much thought. Let's see. Did that. Drawing trend. Mike wants to know about drawing trend lines from pivot to pivot. Absolutely. Let me see if there's any good examples. Usually you can see areas that show specific trend. In this case, there's not a lot of pivots on this. Here you can see that's definitely consolidation if you connect the dots, but here if you connect these dots, then you can see a definite trend line. So any line, you can use any trend line that you like to do that. Oh, I'm on this chart here, so I would have to do that. So in drawing these, there you can see how the trend dots can consolidate. So the trend is broken, okay, at that point. Here is another trend dot there, so let me get out of that mode and move that to there. Can give it's a pretty good approximation, which gives you the same break. But you can see at that point, the trend has already changed, the stops have already been broken, and the overall direction of the trade has already completed once you see the wide bar or the exhaustion bar coming into this. A repeat with selling volume, giving you confirmation, and then boom, you're off to the races. It's a pretty good illustration of that, I think. Do you wait for a pullback before entering as signals arrive normally after that? A lot of times you'll see the signals do come, but many trades will always start after a pullback. So you'll see an initial move, okay, a pullback, and then a trend. And a lot of times you'll see that after the initial trend is given, price will pull back and consolidate. In this case, you can see a definite resistance support area was made. Once price breaks through that, it comes right back to test that same region, okay, before the trend then continues. So the question is, do I wait until after the initial break, wait for the consolidation before I continue a trend or not? It's your choice, because a lot of times if it might not pull back at all. And so if you wait for the pullback and it never comes, then you miss the trade altogether. What I like to do is when the initial signal is given, I like to take and put an initial position on. When it consolidates and pulls back, or if it consolidates and pulls back, then I will add the rest of my trade at that point and then allow it to go to its logical conclusion. If I get stopped out, then the rest of my trade were entered at a better price point with less risk. And so my initial trade has more risk, but when averaged with my add lot, then it gives me a better position with lower risk in the trade, and then I will again follow it to its normal conclusion. That's what I like to do, but you'll need to make that decision on your own. I usually refer to this as the pullback. Yeah, I refer to it as a sweet spot. I've told you guys what my sweet spot rule is, but it's a tool that you use to look at volume. So whenever you see an initial trend, then you look at the volume trend coming back to that, and that measures the potential pullback. And it looks like this one already came. So you're looking for price to pull back into this region. It went down, came right back up into that, and then continued down. So that's not going to give that to you, but at least you saw the price coming from that. But if I see another good example later on, then I'll give that to you and show you again. But I go through that quite a bit in the pre-recorded content in the members area, so you should be able to see that. Guys, I really love all these questions. There's so many questions. I know I'm missing a lot of them. Please don't think I'm ignoring you. I'm trying to get to these questions. So don't hesitate to repeat your question if it's an important one. And I want to make sure I get to that. Trevor, the market analyzer, to set it up, we have workspaces already pre-configured for you, which already have most of these set up. It's a little bit of a setup, but if you were to go into the users area, we do have some videos that show the setup. But the easiest way to do it is just simply load up one of the pre-configured workspaces which have already been set up for you, and then look at how we set those up. Okay, that'll be a key point to do. But I'm going through and already got plans right now of going through and making standalone short videos on each individual component to show you all of the nuances of setting up and using that specific indicator. Okay, Linda says there goes oil. So there goes oil. And there goes our time buzzer too. Looks like we're out of time already. Man, time goes when you're having fun. Anyway, let me see what that does. Yep, there goes oil. Well, I wonder if there's some oil report or something that came out today. It looks like a big wide bar on that. Interesting. All right, so last minute questions here, guys. Last minute questions. I want to cover your questions. If I didn't get it over and you want to see it, then I want to cover it. Judy wants to know about gears. Does it work with the S&P 500? Very quickly, I'll go over and show you that. I've got a chart set up already showing the gears. Right there. Okay. This is a chart that I've got set up. Let me hide a bunch of this noise because most of that you don't really need. Here I've got 4 charts, but each one of them are on different speed. I have a gearbox set up over here which shows me the optimized tick speeds that I use on each individual day for the market that I'm trading. In this case, it's the S&P. I've got one also set up for crude oil. I also have one set up for gold. I've got one set up for YM and a bunch of other ones. These are the ones I have loaded. And each day before the market opens, I look over at my gearbox. My gearbox tells me the speeds to set them to. I have each one of these color coded so that I know what to set them to. So this will be my fastest one. It's my light blue or aqua. So I will set it to 832 ticks, 832. And I've set this up to be an 832 tick chart. I'll wait for the data to reload. Then I'll go over to my blue chart. I will set it to a 1664. Why 1664? Because that's the time frame that my gearbox tells me to set it to. 832, 16. Now, yellow time frame will be at 3328. And the orange time frame 6656. There, now I'm all set up. I've got all my time frames. I don't usually trade off of the light blue, so most of the time I will trade off of the blue chart as my fastest time frame, with my yellow chart as my second time frame confirmation, and my red chart as my third time frame. Judy, the numbers do not change during the day. They only change at the end of the day. So after the markets close at 5 o'clock, 5 p.m. Eastern Time US, then this will change and update. These all remain fixed all throughout the day. But at 5 p.m. it updates and it gives you the numbers for the next trading day. So then you're all set and ready to go. NinjaTrader dows a lot. I don't understand what that means, Jay. Sorry. Does TradeStation ever lock up when I'm using Hawkeye? No, I don't have any problems. I've never had a problem with it locking up. The only time I've had problems with it locking up is during huge news announcements, whenever there's a huge amount of price or tick data flowing through, and that's just a data issue. People without Hawkeye, even their charts freeze up because during those news announcements. So yeah. But I don't remember the last time I had a problem with TradeStation freezing up on me. Can I say how long to stay in a trade if you're using a 3, 12, and 60-minute chart? Well, Hawkeye shows you how long to stay in a trade. You don't have to guess it. You stay in a trade as long as the trend allows you in, or until your profit target is hit. Yeah, so obviously there was some news in crude oil. Let me go back to the S&P. Okay, so if you enter a trade when everything aligns, you stay in the trade until either the Hawkeye stop gets you out or until a profit target is hit that you exit the trade on. So the time frame really doesn't matter. The time frame just shows you a price ratio that you get into. If you traded a 6-minute time frame, then you can see entry at this point, exit at this point, or exit at a profit target, or when you see a pronounced change in volume. Entry on initial trend dot, okay, consolidation, volume, or exit at this point. So hold the trade as long as the trend holds you in. If you're longer term trading, it's the same thing. You see an initial trend entry where everything aligns and gets you into a trade. You hold the trade until either the stop gets you out or until you see a consolidation or a region where price says this is the place to get out, or unless your profit targets are hit. In this case, going from a demand zone in a supply zone into a demand zone with pivot, exhaustion bar, you've got a profit point. You can exit your trade at that point. So it's it's all relative to the time frame that you're trading. For using the 3, 6, and 12, then the 3-minute chart is your primary chart. This is the chart that you trade from. You always trade from the fastest time frame, whether it's the S&P, crude oil, bonds, gold, doesn't matter. gold. Yep, looks like just for the market open, we got a nice trend. We got a double dot confirmation of an entry short in gold. Following that gold, have a nice consolidation pullback. 6 ways the market moves shows you this is congestion entrance, congestion, congestion, breakout. Okay, continuation of trend. Okay. Roadkill confirmation. There's another double dot if you hadn't already gotten into it. So this is showing you that this market is continuing to go in weakness. Longer term, we see that that's coming into a region of support. Okay, this is an area where buyers usually come and step into this market. Money bounce pushed it right back down into that region. We've got to see this region or this zone broken before you're going to see a continuation. Okay, so where's that zone set to? 1321.70. Okay, so if we continue to hold that, all right, then we're going to see price go back up again. This is a really great region of consolidation, but a retest and failure with volume tells me that this trend is probably going to continue down. Same 3-step entry method, but you're just doing it in the direction of the overall trend. This is just a simple correction coming back to a known region of support, retest, and directional trade. So your entry 3, 6, and 12 aligned with the longer term trade gives you a lot more confidence to take this trade. Consolidation, take the trade. Consolidation, take the trade. So continue to trade in the direction of the overall trend until you see a reason not to. Nope, it's not 100%. You will take negative trades, absolutely. But look at all the positive trades you take following the method. You take a negative trade, you exit. And then you look for a new trade. It's the methodology. It's following a system where you're trying to maximize the reward but minimize the risk in any given trade. Trevor, yes, you get all the tools and all of the templates with the starter package, but there are no market analyzer templates that I know of with the starter package because it's just purely volume. It does not have the trend or the momentum tools with it. There might be. I forget whether there is or is not. If there's not, then I can easily show you how to set it up and use it. And I'll be glad to help you with that if there's not one already. All right, those of you who want to get started with Hawkeye, then let me see, what am I looking at here? That's TradeStation. All right, and let me pull up a chart here to show you. If you go to Hawkeye Traders website, hawkeyetraders.com, okay, hawkeyetraders.com, and if you type in the word /WED, hawkeyetraders.com/WED, then that will give you a link to our Wednesday trading special. All right, so I have discounted the volume indicator for you if you want to purchase it today because you're part of this webinar to $97 to get started. So any of the indicators that you want for $97 will give you the starter package and access to all of our content in the members area, the recordings and the training as well. And you also will get access to our members only Thursday training, which is going to be held the October the 6th, which is going to be a week from tomorrow. Absolutely. So that again, let me pull that up here and post that in. It is HawkeyeTraders.com/WED. There, I posted it for you guys to see. HawkeyeTraders.com/WED. Or if you go to our website, anywhere on the website, and just type in /WED, then you'll be able to go to this page and access to the software and add that to your arsenal. That'll get you started. Once you learn more about it, then you'll be able to come back and apply that to the training as well. All right. All right, guys, I'm way out of time, but I just want to make sure I made that offer and got you guys set up, and we're able to get all these things. I've given you quite a few directions here where we're looking at on the overall markets as well, and how Hawkeye was able to just point us in the direction that we wanted to go. We made Hawkeye because we are traders. Nigel and I trade the markets. We made the software for us, and we saw the value of it, and I absolutely love being able to help other people learn how to trade as well. So that's why we're here, and that's why we do what we're doing. We turned our own trading into a business, and now we're trying to help you guys get involved in that business as well. I'm trying to make it as clear as I can, trying to help you. There are quite a few tools we didn't have a chance to go over today, but what we don't go over today, we will definitely go over in the next class. And like I said, promised before, I'm working on putting individual videos, on-demand videos in the resources area, which will spend focused time on each indicator, the setup, the use, the application in the users area. So working on that, hopefully before the end of the year, we will have it all put together and in a nice, concise, linear fashion. Trevor, we don't have any starter packages available for Thinkorswim. Thinkorswim makes all the software public domain. We don't want to expose our software to the public, so right now we don't have any software for Thinkorswim. We recommend, if you are a Thinkorswim user, to get NinjaTrader because NinjaTrader interfaces with your Thinkorswim account, so you can trade on the NinjaTrader platform your TD Ameritrade or Thinkorswim setups. But right now, or for the rest of this year, we won't have any Thinkorswim software available. Let's see. Mark, yes, if you want to run the starter package on more than one platform, I highly recommend you purchase 2 licenses. That way you can run it at the same time. You don't have to worry about moving it back and forth or getting support involved. It's best just to go ahead and purchase both. And you can do it to today's special, just do 2 separate purchases of whichever package you want, and that way you'll have it for both. That's the easiest way to do it. That's even cheaper than our current discount. If you have already own software and you would like to purchase another license for a different platform, then we give you a 50% discount. That's 50% discount. But the special today is even less than that. We normally sell the volume for 360, so 50% off of that would be 180. 97 is much less than that, so you're getting like 75% discount already. So I would recommend you just go ahead and purchase 2 at the 97 today while you have the opportunity. You're very welcome. Can you set stops using the Hawkeye pivots? Yeah, you can, absolutely. Depending upon where price is or not, you can set your stops as far as the highs or the lows. If you're on a downtrend and you see these pivots, would you stop at those? I mean, usually price reverses after a pivot, so it's usually not a good idea to exit the market at that point, knowing that price is expected to fall back and reverse once you see that pivot. So I probably would not be able to give you that information. Trevor, what is the winning percentage of a system? It's very, very dependent on you, Trevor. Your ability to enter when the trend dot changes red, it's going to vary. Whether that trend is a long or short trend, whether you're trading the 3 or the 6 minute, it's a very subjective system, so we don't have any winning percentages or track records unless you're actually trading, because we can't measure you as a trader whether you're going to take the trade or not take the trade. So we just don't do that. David asked, does it matter which MT4 platform your indicators run on? No, MT4 is MT4. So the broker that you have or the platform you're using for MT4 wouldn't make a difference. Yes, different brokers will have different data, and the indicators will only plot the data that's provided for it. So if you currently already have differences in fill data or in chart data based upon uh, whether it opens on Sunday night or whether it continues on through Friday or not, um, Hawkeye will display whatever data your broker provides, whether that's MT4 or NinjaTrader or what. Okay, Marcel, absolutely. If you could send an email to randy@hawkeyetraders.com, I will make sure that you get things set up properly. Absolutely. Also, if you need, we do have trained technicians. So if you go back to Hawkeye Traders website, hawkeyetraders.com, if you go to the store, if you slide on down to services, then we offer a fast start service where for $65 you get 1 full hour of a trained technician who will come onto your computer, who will set up and make sure all your software is installed, will help you set up your workspaces, do whatever that you need to make sure everything is running fine. So if you have any problems with the setup at all, which you should be able to just run the installer and everything should be set up properly. But if you do still have problems and you need a helping hand, then we will come onto your computer, take it over, and do it all for you. But you need to give us a fast start subscription to be able to do that for you. And then we will have our trained technician contact you directly and get that up and running for you. If you have some specific questions that we can help you with through email, please contact me and we'll make sure we get you up and running in no time. Okay? Rude wants to know if I prefer 3, 6, 12-minute time frames over tick charts. Actually, I use both. I have multiple monitors. The current computer that you're seeing right now, I have 4 27-inch monitors set up, and I have another computer off to my left where I have 2 24-inch monitors set up. And so I usually have quite a bit of information here, but on this particular one, you can see that I have a time chart showing me gold. I also have a tick chart showing me gold. So I like to look at both, and I like to trade the one that gives me the best entry. So if I see a really nice smooth entry forming on a tick chart, then I will enter that. If I see the better time frame set up on time, then I will enter that. How does MT4 look? All right, let me pop over to MT4 real quick. All right, this is Hawkeye on the MT4. Let me pull up. These are our other time frames. Okay, this is the volume package only, where you're just looking just at volume. This is displayed on a 15, 30, and hourly chart using Hawkeye volume. Okay. These are the tools with the roadkill. So the total package integrated in with it. Here are some also tools with the Hawkeye Fat Man integrated. So you got the Fat Man on individual charts as well as that, and showing the Hawkeye zones. So you like candles better? Okay, let me change this to candles. There's candles. Let me pull over here. Candles. And here, candles. So if you like candles better, then also get the candles. So that's not a problem at all. What's forex training about, and it'll be available to anyone who wants. And the system is a color-coded system based on the Fat Man. We refer to it as Tomahawk. And the Tomahawk system will be focused on color-centric trading. So it's going to be taking individual components of Hawkeye, break it down into individual color components, and give you a very simple color-coded method for trade following, trade entry, and management. I just showed you that, but let me go back to it. There is the Hawkeye starter package on MT4. All the volume tools, Hawkeye volume radar, you got volume paint bar, pivots, and the wide bar right here. Okay. Now, of course, you can add your MACDs, any other indicator that you have access to in your navigator. You can add to the chart to look at the trade to determine that. You can draw your trend lines just as well on this as you can any other time frame. So absolutely, but it helps you to see because now you can see volume as a function of volume spread analysis on your chart to determine the presence of buying or selling activity. When you see these peaks and you got buying activity coming in, or you see these peaks with selling activity coming in, okay? That's a lot of good information that a lot of traders just don't have access to. It's a great advantage. Yeah, here's the same tool with just the zones. Missed by one. All right. You're very welcome, Trevor. I'm glad I could help and show you exactly what you needed. You're very welcome. I'm going to go ahead and stop the recording at this point.